Good morning. Ira Epstein with your Morning Flash Update. And this update is for the morning of Thursday, the 11th of May, 2023, just after 8:20 p.m. Central Time. All right, we've got our borders going to open up after today, so everybody's preparing, and it's all over the news. COVID in America, the government's no longer going to be paying for a lot of things come the end of the day today. That comes to an end. We're looking at economic data today that normally you would say, hey, if PPI came out and it's the smallest increases we've had in almost 2 years, why is the stock market down on that news? If that's the case, why is the dollar up big on that news? We're seeing yields actually fall. The futures are getting big rallies here. You got up and, I can't say this enough. If you don't learn how to work with these Bollinger Bands and the loss of an embedded slow stochastic reading, you are trading like this with your hands behind you. Just look at this gasoline. Take a look at what I'd been predicting the market would run up to, why it got there, went there today, and boom, right back down. Tomorrow's a big day. We get the WASDE report, which is the supply-demand world events and how our crops are looking. But basically, the grains are under a lot of pressure. Don't know what's going to happen here. Also with Ukraine grain, doesn't seem to be an awful lot going on positive there between Russia, Turkey, the UN. The Bank of England raised its key rate as expected by 25 points. They expect the economy to avoid a recession, but inflation persistence could require further tightening. Same you're going to hear out of the European Central Bank. Weekly jobless claims. All right, the economy's doing what you want. This is what the Fed wants to see. Both they went up. These are the biggest numbers we've had in a while. And they were looking for 3,000. They got an increase of 22,000 on the claims. And the continuing claims are finally jumping. Maybe they can hold on to that. As for the producer price, okay, so now we didn't meet the expectation. So we're starting to see that slowdown in the acceleration of inflation, a good amount of it. And will that keep the Fed on pause? Well, I would say if you get a series of numbers like this come June, it just might. Because now we're starting to see the wobbling in the labor market. Remember I said I'd be data dependent. I see that. Now we're starting to see inflation. While it's still moving forward, the amount of it is greatly reduced. And maybe that's the wobble. So maybe the lag impact is finally hitting the economy. Trying to turn that tugboat before it's going to hit the pier, very difficult. So the Fed's got to step back and make a guess at some point. There's a huge difference between a pause and a pivot to a decline. I want to make something clear to you. Nobody's saying this. The only way that I see that you can get 75 basis point decline by year end is, number one, the economy takes a hit somewhere. That hit means the stock market's dramatically overvalued. People don't want to say that, but that would be the hit. If it's going to be the economy slowing down and not falling apart, why do you have to lower rates that much? Why wouldn't the Fed just sit pat and sit? So there's something not right. I went out to dinner with one of my good friends last night, and we were talking about this. They're money managers, big wealth management, and it's exactly what we were talking about. And I said, what are you thinking? They see it the same way. If the Fed's going to drop this year that dramatic, there's something else amiss. They don't see it. I don't see it right now in the economy. I see the economy slowing, and that is what all these impacts will do. It's only been a question of when the lag impact would hit, not if it would hit. Is this it? I need a little more data, but I'm beginning to think it is. We're looking today at the end of the day, actually ended at 9:30, excuse me. I've been up since 3. So at 9:30, we're going to get the EIA natural gas storage report. And in Chinese economic data, they are definitely slowing down. If you can see here, their CPI up 1/10 on the year. They expected it up 4/10. All the inflation pressure's down, but so is business within them. And they're starting to say, hey, maybe we're not going to sell our gasoline and our other distillates out on the open market. market. We're going to turn it inside the market to keep the inflation pressures down. But they just keep turning inward on everything that we are seeing. And that is something that I think you have to consider. So it'll be an interesting day because you're at support, as I see it, in the S&P. You're at support in the gold market. You're in